Despite all the drama over the last few months, we are within 1% of record highs. Taking a deeper look at this equity market, Bloomberg's Kelly Lyons. Hey, Kaylee.
Hey, John. Yeah, you're absolutely right. And investors certainly are not pessimistic about equities at this point, not willing to bet against the stock market. John, I'm taking a look at short interest on SPY, which is the ETF that tracks the S&P 500. This week, just 2.6% of the float for short interest. That is the lowest it has been since back in October of last year, where, if you recall, that was right before a very steep and painful sell-off. Bullish sentiment didn't work out so well back then. The question now is, are we being too complacent, perhaps too optimistic? Again, that equities will once again reach a record high. And if we take a look at exactly where we stand on the S&P 500 right now, if we can hop into GTV Go on the terminal, you can see the index really has been range bound since about the middle of this summer, but we are building off of higher and higher lows. And at the bottom panel here, what we're looking at is RSI, that relative strength index. It's a momentum indicator. You can see we're really mid-range there, not in danger of reaching overbought territory. So could suggest we do have some room to run here. And how far do we have to run, John? You said it, 1% about for the S&P 500 to reach a new record. On the Nasdaq 100, it is also about 1%, while the broader Nasdaq is about 2.2% from its highs. Small caps, though, John, still got some work to do. You're about 4.75% from a record on the Russell 2000.